All right. Good morning. Good morning, KW Rockwall. Today, we have special guests with us in studio. This is my first time having people in here. Chris, Jerry, glad you're in here. Brett is on a plane, so he couldn't make it with us today. So glad you guys are here.
Happy to be here.
Thank you.
All right. So let's go ahead and dive in. I don't want anybody to be well, here we go. I will get this. All right. So let's look at the stats. We started talking about these stats this morning, and let's start here in Rockwall. Number one thing I heard from you guys as soon as you walked in is that 99 active real? What do you guys make of 99 active in Rockwall?
It's trailing down.
It's the lowest I've seen in a while.
Yeah. It's been a really interesting market so far. We are looking at 99 active right now. And look what we've started doing in the contracts we've written. We're at 16. We're 38 pending, 22 sold. Honestly, I've been expecting this sold number to start popping up. We started going down in October. And so eventually we are going to start hitting some numbers in the 20s. We've been in the 30s, the high 30s. It's the market we're in though. But I will say Rockwall's kind of been the outlier so far, right? When we start kind of checking through the rest of our counties, we head over to Dallas and everybody's in a similar boat, but look what we've got in Dallas. We're at 1,017 active. We went up a little bit in actives, active option at 289, pending 345. And sold 304. So we saw the solds go down in Dallas, but everything else kind of stayed in the trend, right?
And I see when I look at Dallas, I can see, okay, well, that's less than a 10% difference from last week, not a huge change. And as far as actives, but that Rockwall number, I think it's one that we're going to just have to see what happens again next week and see if we see a real trend, or is it a one-off? Is it a true outlier like you're talking about?
Yeah. Chris, you've operated in this market, and I like this perspective. We've got mega super agent here. We've got our wonderful office coach here. And so you guys are seeing this market from different angles, right? So I think this is a great perspective talk this morning. As you've been operating within, we'll just say the Rockwall market, because I think the overall market is okay, right? How do you feel about what you've seen kind of on the ground, whether we're talking about showings or just being out there showing ourselves? What do our listings look like? What are our listings saying?
Showings are definitely down. They picked up towards the end of last week. I feel like it's kind of balancing out a little bit, and you're getting consistent showings starting about Thursday, started picking back up. Seeing land starting to move a little bit better. Warehouses are sitting. So there's builders, developers that are still purchasing land and putting houses up. So that's something we ran into this weekend that was very interesting.
No, absolutely. Let's flip over to Kaufman. This is where it gets really interesting. We look at Kaufman. Let's take I want to flip back over to Rockwall right quick and just look at this line in our actives in Rockwall. Definitely a trend that's been kind of seesawing back and forth and kind of just started this downward, not spiral, but downward direction, right? But as we went through Dallas, a little more even. Kaufman, a little more even, right? 276 on our active, 25 under contract, 74 pending, actually went up on the pendings, and 68 sold. again, this is kind of this sold number for the week is what we saw from the market doing what it did in October. So we're going to keep seeing that again and again. And then when we flip over to Colin, not as flat as the previous two, but relatively, if you drew a line from one end to the other end of that graph, you're still on a pretty level ground. Again, actives went down slightly in Colin, you're at 745. Active option, you went up to 138. And then our pendings are at 214, and we had the drop of 188. So that sold number is the one thing is that's been remaining constant there. The actives is the outlier on Rockwall. Any insights on why? We're all guessing at this point.
It's waves, but they're, like you said, they're not crazy start to finish numbers. Rockwall's trending down, which, hopefully it'll start bouncing back up starting today.
Yeah.
Go sell a house.
Go
contract a house. So you can rebound this.
Yeah,
change this by 1%, Ross.
One of the things I really thought about as I was looking at this, and it was something that I said in last week's call, is we kind of fell in love with the convenience of the last couple of years in the market, right? Sure. It was a lot of fun to be able to sell a lot of homes and only have to travel 10 minutes down the road, 15 minutes down the road. And, as we were sitting in the ALC meeting last week, everybody was saying, yes, I will go 20, 30 minutes down the road, no problem. And I think we have a lot of agents that can still operate within your known market and still sell a lot of homes, right? And so as I'm looking at the opportunity here is we have to get out of the convenience. There's still a lot of homes for us all to sell. We have to be actively prospecting in different areas, not just this one.
Correct.
Right?
Yeah. And, you're starting to see new things that if you came in the industry in the last couple of years, you don't know to look at expireds and call expireds. Well, you should, but most people don't know to do that. You don't have to call expireds in Rockwall County. Look up expireds all over and start calling them. Their phones are blowing up, but they're probably not blowing up with the way you think they are because a lot of agents don't even know how to do it.
Yeah.
So follow those numbers. I think the close numbers don't look terrible across the board, but
when you're looking at the sold, I think we can take a good look at our October numbers here. I want to get off that first week of October because we're kind of operating out through September there. And it's not too far off, right? I'm sorry, I'm on sold right there. You're at about 484 in the last 2 weeks of October. You're at 437. So we're still seeing a little tail drop there, right? But overall, it's not just this plummet that we started seeing coming out of the summer where we all started raising eyebrows, wondering what the heck is going on. And for the people that haven't necessarily called a lot of expireds, don't let your first expired call, Jerry, right, be on an expired call. Right.
You can do some role play around that, right?
Yeah.
There's scripts available for it. Go right. You don't have to go any further than your Ignite materials to find your first expireds, and then on Connect, you're going to find endless things about expired because there's agents who do specialize in that, right?
Mm-hmm.
And so they are, so there's some good materials and best practices available for it.
Yeah, and I would even go even further and say, you've got resources in this office. You got a couple sitting across the table here. Reach out if you need help, right? Jerry, you're always a wonderful resource, and I've heard you before. Chris, you can talk to a wall. Your phone skills are phenomenal. There's a lot of talent in this office that if you think you sound silly, that's all right. We all sound silly to begin with, but know what you're going to say and then just grow that, right? But a lot of growth in expireds.
along the lines of expires, one thing I like and what we're seeing in the numbers is this is going to become a market that's good for sell by owners or FSBOs. And so if it's taking longer, we're seeing days on market grow. And if we're seeing that within the MLS, well, the for sale by owner is going to feel the same thing. And some of them aren't equipped to last that long. And so if that's something you're interested in, start exploring for sale by owners. That could be an opportunity.
Yeah, the for sale by owner only knows what they know in the media, right? And what they see on Zillow and Realtor.com. Those are the only things they know.
Mm-hmm.
So if nothing else, you should be able to go back in previous calls that we've had and be able to have your script ready, and you have everything in front of you. We talk about what's the news is sharing. So go through and actually take a good look at, there's no good place for this thing. Take a look at what we're saying, and that's your script, what you can tell everybody. Let's go over to Denton County, see if we have any other outliers. Active, remaining pretty constant. Our active option, our under contract, constant. And then we get to our pendings, solds. There's the drop.
Mm-hmm. Pretty consistent.
Mm-hmm. Heading over to Henderson County. Henderson County, we're going to get your other numbers plugged in here. I promise you. I've heard you. We're going to do it. But again, you know, we have our waves, but if you go from one line to the other, there's a drop, but it's not strong. I would say we are getting into a groove right now with what the market's giving us, right? One of the things we saw this last week, our inflation, what did it do? We finally put a dent in it. It went to 7.7, right? And if you follow the news, that was lower than they thought it would be at this point. And right away, we already heard from the Fed saying, we're probably going to not do a max increase in December and only do 0.5%. And that is the goal of where the Fed isn't going to show up at their next meeting and not do a raise, because they want inflation down to closer to 2.5%. And so, but when you see them start reducing, we are on the trail back to getting constant, right? We can start knowing what to expect in these markets. And this is a really good thing for us. So as we're talking about the market, the Fed, what it's doing, I want to start here with our 10 financial don'ts heading into a recession. We all talk about our business planning, right? We don't necessarily have the clinic that is just about our financial planning. Gary said in Mega Camp that one of the goals in a shift is to keep your market the same, right? Your volume, your units. And if you can keep it the same when the market is selling less volume, less units, then at that point, you can, you are gaining market share, right? And so you don't have to make the same amount of money, even though you are just selling the same amount of homes you've been selling, right? So if we can start cutting back, this is what we're getting into on our financials, we can actually have greater revenue and increasing market share. Therefore, when the market starts going back up, you keep your market share, you grow your business. Simple as that. A couple things that stood out to me, and I'm curious what you guys thought about this. This first one, don't buy something because it's on sale.
As Black Friday's approaching.
As Black Friday is approaching. I always tell people, if it's something that is planned and it goes on sale, if you're buying it a little early, cool, that works for you. But if it is an unplanned purchase, you're not saving money, you're spending money, right? You're spending more money than you thought. It's pretty simple.
Yeah, you can buy things to invest in your business while they're on sale if you plan to buy them already. But remember, don't just jump into it.
Oh, no ads. I really like this one down here on number 8. Don't continue to pay for things and services you do not need. This is kind of like the storage unit, right? You have the storage unit, You never go back to the storage unit. You just pay $100 every month.
Only time you go back is to put more stuff in it.
Put more stuff in it. But in our business, we should be looking at fixed and variable expenses, right? Have you guys ever, what are your practices on going through line by line, looking at the fixed variables?
Not great at it. We are trying to get rid of a couple of things, like one of our phone platforms that we just don't use anymore. And some of those guys, man, when they advertise to you as agents, there's you'll never run out of people that want your money. Whether you're a brand new agent or you're a seasoned agent or you're a veteran agent, they always want your money. And when it's time for you to end that service, it's not always easy to do. I've been fighting with a certain company for a while now, and I actually had to call the credit card company to stop them from billing me. But yeah, you got to look at them, and if they don't want to give you your money back, probably a sign that they're preparing for the same market that we're in. They don't want to let you go. But yeah, just trim the fat. If you don't need it, get rid of it.
Yeah. Jerry, what about you?
I like the idea of looking at your past statements. And I like to actually touch it, right? So go ahead, go on, print out your last 2 to 3 month statements and see what you're spending your money on. You might be surprised what you've forgotten about that's just continually getting paid for. And so I would like starting there. I haven't taken this measure, but I kind of like the idea of switching credit cards or, change your credrit card and don't update it. Don't update. See who calls, right? That can get rid of some expenses right there. But you are going to run into what Chris says, that you got to do some fights. But I think by printing it out, putting your hands on it, it's just being intentional about it, right? All this article is a shift tactic too. And we've been talking about shift for 2 or 3 years now, right? And so it's just being mindful and intentional and, making sure you know what's going on in your business. And it starts with knowing.
Yeah. Yeah, absolutely. I'm there with you whenever I'm putting together the really going through budget. I like to have a couple highlighters out. What are my one-off things that I purchased through that year, right? There's always those things that, all right, I'm not going to purchase another laptop or probably not going to purchase that printer again, office furniture, and then start highlighting all those variable expenses, right? What are your recurring expenses? And getting a really good idea. There are things that, man, it's become a really big convenience for me over the past couple of years to have certain programs. And don't fall into the lie that $20 is just $20, because if you cut 10 things, then all of a sudden you're saving $200, right? But I think we start looking at that, thinking, well, it's only $5. It's only, you start putting together that line by line item on a spreadsheet and looking at actually what that savings per month is. And I think it gets really big pretty quick.
And especially when you annualize that monthly savings, right? So it's 12 times. The, other thing that we look at is, we talked about, yes, you might be able to grow your business with reducing expenses, but you got to hold your money accountable, right? So have those line items brought you any business? Are they giving you a return on investment? We look for a 1 to 4 minimum, right? A 1 to 4 minimum return. And if you're looking at items that aren't giving you that type of return, then should you really be paying for them?
Yeah, absolutely.
Because that goes to your profit. Bottom line is you can definitely cut your way to profit. You may not be able to cut your way to increase market share, but you can definitely cut your way to profit.
And just because it's a write-off doesn't mean you're not spending money.
I have fallen guilty to that thing. That's a tax write-off. It's fine. No, it's still coming out of the account. But there's a lot of just practical things in here, right? Don't buy new, buy used when you can. Don't replace, repair. Number one culprit right there. Something breaks, and I could probably fix it if I'm like, yeah, it's broken. Just get a new one. So going from that, I want to just take a quick look at this Redfin getting rid of their iBuying program. I thought this was really big. Going on the tails a year ago, Zillow got out. we talked about last week, that open door guy is stuck with somewhere around 17,000 homes in inventory. It's really big, right? And Redfin, being an employee-based real estate company, also slashed, I forgot what it was, a quarter of their mortgage side. Their footprint out in Frisco, they cut half of that lease, right? So they're doing a little bit of what we talked about, but they're doing it in a very painful way by letting go of employees. I think this is what happens when we don't pay attention to the market and we don't pay attention to our budget also, right?
Well, it also speaks to the excess of a great market. Like a great market will cover up a lot of mistakes. And quite frankly, investors, and I saw this, in 2008 when I was in Washington State, I was looking, because I started as an investor, not as a real estate agent. And I was looking at properties and evaluating them. And there were people buying properties that made no sense. Like you make your money in investing when you buy, right? And so they were buying at way above market. Well, what ended up happening was they were making up for their mistakes by appreciation because the market was appreciating. So when 2008, 2009 rolled around, unfortunately, a lot of those investors were bankrupt, right? Because they got caught. And that's kind of what we're seeing. This is just, Redfin, Open Door, they're just large scale investors, right? And, they've got to cut losses and they're doing it they're doing it now because the market's not appreciating at the level, at the rate to make up for their mistakes.
You want to hear something kind of funny? We all get do you have any off-market property calls, right?
Yeah.
Do you have you ever had one of those?
Yeah.
Hey, so-and-so,
That's
just looking for an off-market property. I had one of those guys call me yesterday. He says, hey, I'm an investor in DFW. And I was like, oh, here we go. He says, I've got an off-market property. Do you have any buyers for it? I was like, wow, man. Yeah, I do. So
Now we're talking.
it's our turn to beat them down.
Yeah, I think another good point to make on this is, even though I feel like we could see Open Door go this route, they've got a lot of big investors behind them. So it's a little different there, but I don't think the iBuyer program is going away at all, right? There are actually sound companies out there that aren't just looking for this mega growth and that are actually willing to work with you. And I think it's really important to mention somebody like Keller Offers, right? Homeward. Yeah.
It's a great time to use them.
Yeah. You have two wonderful companies that are in your backyard that are at your disposal to use. And also, as we're talking about this FSBO conversation, one of my favorite things to be able to let a FSBO know is when they say, yeah, if you have anybody interested, bring me an offer. Actually, I do. Right. It's a great way to actually get into that door and let them know that I'm willing to work for you. So going on the heels of that, I think it's very pressing to talk about 7 things top agents wish they did sooner.
Can I just make one last
comment? Yeah, go for it.
It's like you said, I don't see that going away because I think it's been around forever. We just got into the point where we gave it a name, and it's that buzz iBuyer word. It's about convenience. There is a place for it in the marketplace, right? It's about convenience for the most part, and you're going to make less more than likely than you would if you put your house on the market. And with the retail route, using us, helping you to get the most amount of money in the least amount of time possible.
Yeah, absolutely. Well said. So let's look at these 7 things that agents wish they had done, right? Number 1, hired an assistant. I really want to focus in on this because I talking with a group of agents this last weekend, and we talked about assistants. Assistants don't have to be this big expense, right? You can pay somebody $15 an hour, $10 an hour to do a lot of things for you. And if you're smart, it only works if you're smart with your time though, right? You can pay somebody $15 an hour to do your database and save you an hour, 2 hours of your time. But if you don't turn around and use
Mhm.
that hour or 2 hours towards your business, all you are doing is really being lazy. Just call it what it is, right?
So case in point, so if you hire an assistant to, your morning starts, and you start digging into all the problems with your contracts, right? And then it's 9 o'clock and you're still on the phone dealing with yesterday's problems and you're not lead generating, right? So if you hire an assistant to take some of those things off your plate and you say, well, I'm going to go to the gym from 9 to 11. What are you doing? You're not working. Yeah. So now that being said, if it's giving
Unless
you
you
more,
work in the room.
yeah, you could be lead generating, I guess. Or you should be working out, just being lazy. But if it gives you time, if they give you time back with your family, that's a value add as well. So you don't always have to be working, but if it's whatever your pain points are, the assistants really help.
Yeah, well said.
And I think that along the same lines, I mean, an assistant might be, you just need to get someone to do your transaction coordination because paperwork's not really your thing. And, you using the leverage center, there's no shortage of, transaction coordinators who
Absolutely.
they do this and they like it and they're good at it.
Yeah. Just another great thing about this office, right? If we really pay attention to the value add that we have so many talented individuals that are around us. And we have a talented team, right? I don't want to say that we're individuals because I think our back office works just magnificently together. And it's a very solid team. We have a lot of resources. We just have to use them, right? I wanted to say this, optimize their database through a CRM, just use a CRM, right? I think a lot of us think we have more capacity to do than we really do. And so we waste more time and energy just trying to keep up with everything when the work just starts to take us over, right? CRM keeps all of that in line.
Yeah. Our focus this fall is totally reworking our CRM, making our CRM work for us, because right now it's not. So don't get so busy that you don't put your time into that. It's very important to enter your notes, your calls, your talks, everything you've got in your CRM. Most importantly, people. Get off your phone. This is your CRM.
Yeah, that's your CRM, right? That is.
Although Jimmy, this is Jimmy's phone. If I took this phone and walked out of here, what are you paying to get it back?
And then the last couple of things they have on here is build relationships with other agents, join a mastermind. The relationship piece is so key. Everybody needs to realize that we're kind of in this together, and especially being with a group like Keller Williams that gives back, we need to be able to give back, because when we give back, we can also grow, right? And having relationships in a market that's shifting, when we can work well together, we can actually close, right? But when we don't work well together and we don't trust each other, it gets really hard to get through difficult situations, right? So we're at the end of our time. I want to flip over to you guys. A couple takeaways from today's call. The charge you would say to everybody out there listening.
I would say pay attention to your expenses. Take a look at that. Use your CRM. It will actually tell you what to do. Like sometimes agents will say, I'm not sure who to call. If you're using your CRM, you can wake up, log in, and it'll tell you who to call.
If you're using it properly.
Right.
Yeah.
Right.
Mine.
We all got room to improve on that, right? So,
I'm going to print out bank statements and start highlighting and looking at what's not making us money. Like Jerry said, that's something that you can get easily overlook, and take this time. So if you were your agent with your hair on fire for the last 2 years and you're slow now, don't panic that you're slow. Go back and look at your systems and what can you fill that time that you have now with? What didn't you do that you can do now to build your business better? So,
well said, guys. Thanks for being here this morning with me. This was a lot of fun. Everybody go out and really just do.
Good.